Hey guys, it's Mark here and welcome back to Digi Profits. In this video, we're going to have a look at the price action on Bitcoin, overall crypto, and the overall market as a whole. It's quite an important time right now, as you know, with the major drops overnight in the last 24 hours or so of Bitcoin and all the altcoins and everything in the overall crypto market. And a lot of people are wondering, why is all this happening? Is it because of this thing that happened with Celsius? Is it because of the inflation rate being higher than expected? Is it because of whales dumping on people? What is it? What's the cause of the overall thing? Well, I'll just move my cam over here and I will shrink that up a little bit. Well, to start with, inflation is running hot, but that's not quite the full picture. Inflation is running hot. It's it's up everywhere. Used vehicles, new vehicles, food, shelter, energy, and what have you. But inflation was already high throughout the last, the 2020, 2021, throughout that bull market right there. Inflation was high. It just wasn't being reported as high. So now it's so high that it can't not be reported as high. But it already was high. You could see it. The prices of houses was up massive amounts. The prices of luxury assets and so forth. The prices of a lot of things, a lot of goods, was already up massively. Okay, so inflation already was hot. It's just only now being reported that way. And that's the key. That's the key in all of this. So, and how does that affect things? Okay, now first of all, I want to say that inflation affects the sentiment. There are many periods where inflation has been up and stock markets have gone up, but it's the sentiment around what's going on about what the Fed are going to do and how everyone else is going to react, and people future predicting how other people are going to react is causing them to buy and sell. Okay, so it's important because sometimes inflation is at a certain level, but everyone's used to it, or the Fed, the interest rates are at a certain level, but people have priced it in. If it's not priced in, things can go well, quite bearish as people go risk off. But anyway, I want to also mention to you guys the fact that all of the altcoins on crypto, even Bitcoin to a degree, are all tied in together. They're all intertwined because of liquidity pools. There are thousands of liquidity pools out there, and and as a result, what happens is, I'll just give you an example of how it all pulls each other down, because this is important to understand, because then you're going to understand exactly why UST and Luna, when that crashed, it caused all of crypto to go with it, and why the Celsius problem in the last couple of days has caused all of crypto to go with it. It's not just the inflation stuff going on. That's certainly contributing, but the Celsius issue has caused a massive extra catalyst towards the downside. So, okay, so what's a liquidity pool? A liquidity pool is where people will say they'll own some AVAX or something like that, and then they'll go to a liquidity farm or pool provider like, say, Trader Joe, and they'll go, right, okay, let's have half of what Trader Joe want you to do is match your AVAX holding with the amount in Joe. So you either sell half of your AVAX to buy Joe, or you buy additional Joe to match your AVAX. Whatever it is, you supply 1-to-1 as a ratio to the pool. So you might put in, say, $10,000 of AVAX and $10,000 of Joe into the pool. All right, great. And because you've put that in there, now anyone doing trading on Joe between AVAX and Joe, they'll be able to use that liquidity pool there in order to facilitate the transaction, and you're getting a percentage of the transaction fees as your APR. Like you earn a percentage of that, and that's how you essentially, it's like earning interest on having put your liquidity in there. Okay, and what happens is if the price of AVAX goes down, then because of the automated arbitrage bots that people have, in order to maintain the one-to-one liquidity ratio, so you've always got, say, for that $7 million in liquidity here, $3.5 million of it is AVAX, $3.5 million of it is Joe. So let's say the price of AVAX drops by 20%. So even if no regular traders are selling their Joe, that automatically the arbitrage bots will sell Joe in order to bring it back to a one-to-one ratio. So let's say you've got $3.5 million of each, and then all of a sudden AVAX, it's $3.5 million becomes worth $3 million. Then a certain amount of Joe will get sold off, so that now you end up with say 3.25 million of AVAX and 3.25 million of Joe. Essentially that brings AVAX's price up a smidgen because it's such a high market cap, it's not going to affect it much, but it'll bring Joe's price, which is a low market cap, down by a reasonable amount more. Okay, so if AVAX was spiraling out of control towards zero, like Luna did, then it would just keep on, Joe would keep getting sold to buy more AVAX, and that liquidity pool would just spiral right down. And that would be a problem, because not only would the price of Joe be going down here, but that would be then on other liquidity pools that Joe's in. It will be also pulling those other cryptocurrencies down a little bit with it, potentially. And the higher the market cap of the coin that is being pulled down, the bigger the problem. So if it was Joe that was the problem, that's not going to affect all of crypto. But if it's a top 100 cryptocurrency, yes, of course that can affect a lot of things. But in the case of Celsius, it wasn't so much Celsius that affected all of crypto. It was the fact that in Celsius, people who have liquidity in there have it in Ethereum, and they have it in other big currencies. And because Celsius announced that you cannot withdraw your cryptocurrencies for a period, they've suspended it, then people would just log into Celsius and go, well, okay, I will then take my liquidity out and put it into USDC if inside Celsius. So it effectively selling off Ethereum in big quantities, for instance. And then that is in a lot of liquidity pools that pulls down a lot of altcoins. And it's just a big spiral. It's a big spiral. I mean, Joe is a relatively low market cap coin, and look at all the graphs of every coin next to it though. They're all the same. They're all looking relatively the same. Yep, the percentages are a tiny bit different, but essentially most of them are the same. One exception here, this one didn't drop by much because it had a bit of a bump. The graph still looks similar, but in terms of its inflection points, but the overall result a bit less. But it's also for the month, it's pretty much the same. Looking out further, I'll just move my face over to here, just looking at other altcoins. Look, graphs are all looking the same. Even as high as, DeFi Kingdoms, the number 2,943 altcoin. The graphs are looking relatively similar. Of course, more volatile than these ones, than the higher market cap coins, but still essentially the same, and kind of 13.53% overnight is kind of stacks up reasonably well compared to the altcoins, the bigger market cap altcoins in this particular case. But 52% for the month, still obviously doing worse than many other coins, largely due to the fact that it also owns a lot of locked Joule, which is a problem in a bear market because people fear that unlocking. But we won't talk about that in this particular video. I'll save that discussion again for another one. It was mentioned in the previous video anyway. But it's important to see how this cascading effect works, because it's also the reason why you end up with altcoin season when Bitcoin goes above its 50-week moving average, it's on its way up, and all of a sudden all of these pools are dragging, like as all the altcoins are going up and people are buying the altcoins, all the lower market cap altcoins are flying up, and it goes in reverse. So this whole cycle goes in reverse, and bam, 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 domino effect in reverse upwards. So it can go the other way too. It's certainly The least volatile is Bitcoin, and obviously it's very volatile compared to a regular stock on the stock market, but it is not as volatile compared to all of crypto. It is the safest of the crypto when you're in a bear market, but it is not safe. Certainly not in these times right now. Okay, so, and this is not financial advice, and this is not saying to go sell or buy. This is not giving you any signals whether to buy or whether to sell. This is simply my read on the market and explaining what happened, why it happened, and so you can make your own informed decisions, okay? Because I know that some people have done very well by holding all the way through a bear market and through to the next one, and they're playing a longer term gain. Other people are dollar cost averaging in, when there's a bigger dip. Certainly for me, I am largely risk off. I have dollar cost averaged in on the major dips, but I also, in the last few days, I've been shorting the market, so I've actually broken even on this big dip because I heard the rumors about Celsius. I wasn't sure if it was true or not, but then they ended up freezing, that they might have liquidity issues, and then they ended up freezing withdrawals, and as a result, all the shorts came through quite well for me. But I'd also held some long positions, but it basically made it a wash for me in that particular case. So, everyone plays it differently though. So, and I will talk about shorting and how to short in a future video. But it is, like anything, there's always a degree of risk involved. It's just that at the moment I'm going with the market rather than against it. I'm largely risk off, but I do have a position in case there's a major bounce and that kind of stuff, which can always happen from the dips. But the overall macro is looking on the downside at the moment. All right, so Bitcoin, it's hitting its 200-week moving average. Many people think that means we're close to the bottom. Like, look at this. Like, a lot of the time when it hits the 200-week moving average, the bottom's in. There, all the way through, like there actually, sorry, that's already above the 200-week. Here, further back, 200-week moving averages wasn't even around because Bitcoin hadn't been around long enough, but it certainly hit the white line on our regression graph. And this is the one time it dropped. COVID was when it just dropped below for a couple of days. Okay, so a lot of people think, all right, that means the bottom's in, 200-week moving average, that's where I'm buying. This is different though. This is different. So I don't think that means the bottom's in, but totally those people may be right. So I don't want to say I'm right. I'm just saying what my opinion is. Okay? So other people say it's the bottom's in because look, on the RSI, that the purple one, the bottom has never gone below this area here, around about a 25-ish or whatever relative strength index. Although the average is not at the bottom yet itself, so potentially it would have to hang out there for a while just to bring that average down till it hits it, because it has gone there. So some people think, okay, either we're at the bottom or when the average hits it, then we're at the bottom. Okay, great, but the entire time that Bitcoin has been around, the S&P 500 has never been had a major crash. It's had little corrections, but it is the subprime mortgage crisis, the dot-com bubble burst, the 87 stock market crash, the crash in 1973, all of those major stock market crashes were before Bitcoin even existed. So they are major macro events. So Bitcoin has not been in a major macro event yet. It has been in the closest thing to a major macro event that it had was COVID. And what happened? Bang. First time below the 200-week moving average by quite a bit also. But not for long because everything, including all the markets, bounced out of that very fast. Okay, so let's look at this on a wider time frame then. Okay, so Bitcoin it came around about here, right? Okay, so we're all bang on the way up. It's all up. I know there's a little down there. Bitcoin also had a crash there, but essentially, we've tested the 200-week moving average a few times. But so that RSI, it's in line with Bitcoin as well, or the RSI there, or the QQE, which is a different form of RSI. It's slightly more accurate. Okay, but look, down here is where we hit when we had our had the subprime mortgage crisis, right? Yes, we only just touched it, but we still hit it with the dot-com bubble burst, the 87 stock market crash, and also back 1973, we're also hitting it there as well. So potentially it could go down as far as that. And I'll just zoom in a bit here because it's quite important to understand that, because if we test the 200-week moving average, which is quite likely, then Bitcoin is likely to test at least $1,800 in that case. It's going to test at least that. I mean, if we're here and it's testing 2,200, it's likely to test 1,800. It's not a guarantee-ment. It could be that Celsius has dragged Bitcoin down lower than it should have. There's automatic selling going on, which is different than people just deciding that they want to sell. You know, from the arbitrage bots, from the various liquidity pools and so forth that Bitcoin is in. It's caused it to come down quite far, but I still think that there's a high chance that if the stock market's down here, that Bitcoin at some point, there'll be a catalyst, there'll be another run on another liquidity pool, currency, whatever, crypto, like Celsius, and then bam, that'll affect it and find its way, Bitcoin would find its way down to at least 18K, possibly even as low as $11,500, according to my calculations on Bitcoin, hitting here, or even here. It may need to come down to this fib level here in order to, which is one fib level below the 200-week moving average, just like we did there. So one fib level below would see us be at $3,200, and if the bottom was in there, I would be very surprised if Bitcoin didn't go as low as around that $11,500 range, which is a fib level for Bitcoin. If we end up with a major, I think the absolute, there's a couple of worst case scenarios. So worst case scenario number one would be that, I mean, obviously each of these fib levels can be hit, and they could be the bounce up. There's a lot of support there, but worst case scenario for me is probably that we retest the COVID level. There was a lot of support there that caused it. Then it was look at that spike out of there. There's a lot of market support across the board at that point that it actually flew up very, very fast. So that would be $2,200, and you're probably expecting Bitcoin not to be as low as it was at that point in time, because it is now a much more supported coin. At that point in time, it hit about $3,000. It would probably be, I think there was a fib level around $8,000. So if it hit here, you're thinking maybe an $8,000 Bitcoin. If, though, we end up back here, all the way back where we were in 2016, which I think is the absolute lowest we're probably going to see, and it's probably unlikely, to be honest, very unlikely, but if we did, that's where you get your possibility of say a $4,000 Bitcoin or something like that. Now, I'm just painting the worst possible scenarios. Those aren't likely. The most likely is probably that we end up here, Bitcoin's at $1,800, and $1,800, and that's if we hit here, $1,700, that's the bottom for Bitcoin. Next likely scenario is that $11,500 range. The lower you go, the harder it is for it to stay there for long as well. So you may find that, yes, you do see the super low value, but it's only there for 2 days, and it's due to a capitulation of a bunch of altcoins at once or something like that with the LPs drags Bitcoin down temporarily, but it's like holding a ball under the water, like a soccer ball under the water, and then bam, it just bounces up because of once all of the automatic selling has gone on, the real people wanting to buy in at that point, like maybe a bank or a financial institution or whatever, wanting to go, no, we need to have some holdings of Bitcoin. Now's the time, or they've been dollar cost averaging in. Now they're increasing their spend, and they, bam, it starts to rise, and other people see it rising, and then they all buy in. Next thing you know, bang, and then you're back where you found your bottom was in. Okay, so just to bear that in mind. The reason to bear all this in mind is that you can't go all in on anything that you're doing. Altcoins are very risky right now, and and I want to keep everyone safe as you possibly can be, while also realizing you've got to be able to be there for when the bottom is in, or there or thereabouts, so that if that's it is the bottom, you've at least got something in there so that you can do really well with the upside from there. Okay, so anyway, so what happened with Celsius exactly? Well, basically, I'll just read what came through in the news. A decision by embattled cryptocurrency bank Celsius to halt withdrawals from nearly 2 million users, not 2 million dollars worth of currency, that's billions of dollars worth of currency. 2 million users rattled the crypto markets, and due to extreme market conditions, they announced that Celsius is pausing all withdrawal swaps and transfers between the accounts. Okay, so basically, in layman's terms, this is basically saying that people who deposited money with Celsius to reap its really high returns, they can't for the time being get out. So the company has said that its users are believed to be holding $8 billion in deposits, which are now frozen. Okay, so even if they can't withdraw their LPs from in Celsius, it is making them elsewhere, because most people diversify. They're not just in Celsius. So they might be in a liquidity pool somewhere else and be like, well, I'm selling my ETH over in this liquidity pool over here, or I'm selling my Bitcoin that's in this other liquidity pool over here, because I now no longer trust the other liquidity pools, because what if one of them freezes things? Now, Nexo would have been really worried about this, because they'll be thinking, well, if people are doing a run on Celsius, what if they do a run on Nexo? What if they do a run on us? Can we handle it? So I think that they really wanted to just send a sign to the market that they have a lot of backing, that they have a lot of liquidity, and please don't do a run on us, is basically what they're saying. And they did this by releasing an offer to purchase Celsius's collateralized loan portfolio. They didn't mention a price, but they're basically saying that they're willing to buy it, but they didn't mention a price. So I'm thinking that it's, until proven otherwise, until they actually go through and buy it, it's a bluff. It's just simply there to make it sound like they've got a lot of extra backing, so that people won't suddenly do a run on Nexo or try to. Secondly, though, they may be genuine and maybe seeing it as a way to get more of a monopoly, or closer to a monopoly, on that side of the market, because Celsius is one of their major competitors. So one way or the other, hard to say. My guess is that it is the former. It is simply a really good PR for Nexo, really to it won't bump their price or anything, but it might stop people major whales trying to do a massive run on it, or people that are in Nexo panicking. So I think that's more what they're trying to do there. But time will tell. We'll see. A lot of people are worried about Tether, because that would be the major thing. If you're ever going to see Bitcoin go down to $3,000, maybe even lower, if that's ever going to happen, that would take something like the collapse of Tether. It's still very unlikely, but and even if it did collapse, it may not cause Bitcoin to go to those levels. But I mean, it would probably need something like that to happen for that to happen. So, Tether, it is they've released how they are backed, which is helpful, because a lot of people have always been questioning whether or not they just keep printing money, and whether they are actually, if there was a run on the bank, are they really backed by real currency? Well, they are backed by 75% cash and cash equivalents, commercial paper, basically anything they can turn into cash at the speed of light, very quickly. 75%. They have not released, though, what the full details of that commercial paper is, other than that only 3.87% of it is true cash. So the rest of it can be liquidated very quickly into cash, but it's probably earning them some degree of interest or what have you. But, there's always that concern. And if there was anything dodgy about it and a major whale found out about it, then, obviously they would find a way to maybe short the market over here while trying to bring it down over there with, billions of dollars in sales of USDT. But they wouldn't want to do that if they were wrong, and USDT is fine with that backing. Now, they've also got secured loans, corporate bonds, precious metals, and other investments. But there is that concern. It's because it's always been a bit like they've managed to hold their peg for years, but there's so much of crypto is in Tether. It is, and it's used by trading and so forth. It would be a major blow if something like that happened there. And it's very hopeful that it won't, but certainly that would be the major concern. Also, recently, it's just been announced there's a class action lawsuit against Binance.us. I personally am not sure how that would affect Binance's own currency other than sentiment, because it's not the same as Binance.com, which most of the world trades on. Binance US is different. And they may have even registered that as a separate company. I'm not really sure exactly how the Binance.us thing works, but I will say that certainly that could lead to a degree of at least sentiment towards Binance that could lead to people selling a little bit of Binance's coin off. So anyway, Terra investors have filed a lawsuit against Binance.us claiming that the exchange misrepresented the UST stablecoin. The investors have complained that Binance.us represented this stablecoin as a safe investment and erroneously claimed that it was backed by fiat currency. I didn't realize that they may have done that. So Binance.us also allegedly failed to comply with regulations and security laws though Binance.us does contest this claim. Okay, and also the fiat currency claim. So, but that's what's going on there. And what's coming up though, because of the fact that the interest rate came back the inflation rate came back 8.6%, which was higher than what the markets had priced in. They're pretty much 100% expecting at least a 50 basis point hike. But because it's higher than expected, now the market is expecting that there will be more basis point hikes in the future than what they'd originally priced in. They were probably thinking 3 or 4, but now they're thinking maybe 4 or 5. So that's important to note. So that's coming up June 14, 15. And if it comes through as 50 basis point hikes, we may see another market reaction to that. And so that's something to definitely watch out for. But also, you don't always see markets go down when basis point rate hikes come in. There were certainly basis point hikes back in 2015 and 16, but they were 25 basis point hikes. They were well priced in, and the markets just kept going up despite the basis point hikes. 50 though, that's a different thing. That I think that certainly keeps providing more and more uncertainty, and as a result, there's more and more risk off in the market. But there will come a point where it gets fully priced in, and then even perhaps the later basis point rate hikes may or may not impact the market the way it is impacting it right now. Because people try to front run the market. They try to predict where it's going to go way down the track. So therefore they make their buying and selling decisions now, and so forth. And then you get panic selling and all sorts of stuff. And like I said, with crypto, with all the liquidity pools being intertwined, you get a cascading effect, which ultimately is why altcoins can bleed quite badly against Bitcoin, because if Bitcoin moves down, it drags the prices of those altcoins down. And some people panic sell as well, so they end up going down even further. And then Bitcoin goes back up, it drags the altcoin prices back up with it, but only at an equal rate, because not enough people are investing in the altcoins right now because we're in a bear market. But in a bull market, when you're above the 50-week moving average and all of that sort of stuff, Bitcoin goes up, it drags the altcoins up with it. But people start going risk on, and they buy a bunch of those altcoins and they fly up even faster than Bitcoin, and then they all affect each other and they all drag each other up, and it's a pretty crazy thing. So you may end up seeing down the track, maybe next year, maybe later this year, probably more likely next year, a repeat of the 2020-2021 bull market. That could all happen again on repeat, but we may get a lot further down before we see that back up again. So anyway, stay safe, never go all in, and just I would say err on the side of conservatism with what you're doing, but at the same time, be wary of the fact that one day the bottom will come in. So you've got to keep up to date with this stuff, because it can also, bear markets can turn out to be the ultimate chance to actually become extremely wealthy if you can read things right and get enough in at the right time. You don't have to time the bottom, but you do want to be able to at least have some of what you put in and around, even within 30% of that bottom. It can be it could be life-changing for many of you. And the other thing to bear in mind is that now is a very, very good time to be earning US dollars. So for me, that means selling, making online sales as an affiliate, I've got other YouTube channels and stuff like that I run. Like I've got Diabetes Smarts, over 300,000 subscribers. I get paid by YouTube in US dollars, thousands of dollars a week. I've got my own information products in many different niches, ranging from personal development to health to dating relationships to, I've been in many niches over the years, language learning, many others as well. And, that's all stuff that I'll be sharing with you guys in upcoming videos, like how to do this stuff, how to drop ship physical products and earn money from that, how to sell books on Amazon Kindle. We've got a lot coming up, and it is important to have a stream of income, even if it's a small stream, even if it's just a little side hustle. If you could earn some US dollars, then when these periods come where the US dollar is strong, you're still able to at least be making money on that side of the market. Not that you wouldn't make money when US dollar is weak as well, but there are times when crypto is doing well for you, and then there's going to be times when it's the other side that's doing well. It's all digital profits, and that's what this channel's all about. So I'll be getting onto that pretty soon as well. All right, so anyway, that's it for this video. I'll see you in the next one. Bye for now, everybody.